Welcome friends. Now let us continue with your November 2022 amendments in your GST, where we'll be focusing on other small amendments in different chapters. First, we'll see the amendments that has come in your exemption chapter, which means you're talking about exemption on services by virtue of exemption notification 12 bar 2017 CT rate read along with 9 bar 2017 IT rate. So you're talking about exemption which is there in these rate notifications. Now friends, the first exemption has come in your passenger transportation services, a very logical exemption that has come. So if you walk through your passenger transportation services, you will find that passenger transportation services are exempted in various scenarios. One of such scenarios is if the passenger transportation is by way of your contract carriage, which is non-air conditioned. So contract carriage should be there, it should not be with air condition, and other than radio taxi, so the exemption is not there for your radio taxi. Also, it should not be used for tourism, conducted tour, charter or hire. Basically, the exemption is for this situation: contract carriage plus non-AC plus you're talking about not for tourism plus you're not talking about radio taxi. So once all these conditions are satisfied, then there's an exemption. Likewise, there is an exemption when you talk about your stage carriage. The only condition is it should not be air conditioned. So for stage carriage, the point is quite simple, that it should be a stage carriage plus it should be non-AC. For contract carriage, it should be a contract carriage plus non-AC plus not for tourism, and it should not be a case of radio taxi. Whereas for stage carriage, it's quite simple, that it should be a stage carriage where it is point-to-point transportation. That's the difference between contract carriage and stage carriage. Contract carriage, there's no point-to-point transportation, right? Whereas in stage carriage, there are fixed point-to-point transportation. So if you're talking about your normal city buses, they are all stage carriage. It is point-to-point transportation, right? So there are fixed points at which that particular bus will stop, and from there you will get on, and the next stop is also fixed. So that is basically stage carriage. Contract carriage, say for example, your family is planning for a trip to a hill station, so there is no point-to-point carriage. So that is the example of contract carriage. So coming back to the amendment, now what is the amendment that is come out? The point is, when you talk about both these B and C, their focus is only on this contract carriage and the stage carriage point. If at all they have been provided through an electronic commerce operator, which means online platforms, and they are covered under section 9(5). If you recall, if passenger transportation service is through electronic commerce operator, it is highly possible that it is covered under section 9(5). In such a scenario, it is no more exempted. So the exemption will not be holding good. So exemption is ruled out. Your exemption is ruled out. So what are they trying to tell? They have amended your section 9(5). They have widened the scope of section 9(5) in terms of passenger transportation services that we have discussed some time back, right? Previously it was covering only your radio taxi, your motor cab, your maxi cab and motorcycle. Now that motorcycle, they have made clearly clarified it as motor car. They have added omnibus, they have added any other motor vehicle. So scope has been widened. So the moment the scope has been widened, they clearly know that these cases can come under your section 9(5), and they want to tell that if at all they are covered under, they are supplied through electronic commerce operator, point number 1, and they are covered under section 9(5), which means ECO will pay tax on their behalf, it is no more exempted. So exemption will not be there, exemption won't be there when they are provided through electronic commerce operator and it is covered or notified under section 9(5), where ECO will pay tax and not the supplier. So that is the point which is there. The same kind of point is there when you are talking about metered cabs, auto rickshaws. Same kind of point. Metered cabs and auto rickshaws, they are also special types of contract carriage. So for metered cabs and auto rickshaws, including e-rickshaws, your electronic vehicles, the same point is there. So the amendment which is there for metered cabs and auto rickshaws will not be there if at all they are supplied through ECO and it is notified under section 9(5). So when you talk about your metered cabs and your auto rickshaws, by default they are exempted. By default they are exempted, you need not see any of the conditions, but if they are supplied through eco plus it is covered under section 9(5), which means electronic commerce operator will pay tax. In that scenario this exemption won't hold good. So when it is through eco and section 9(5) is applicable, it will be taxable, and the person who will pay tax is electronic commerce operator, not the supplier. Supplier will not pay tax, it will be paid by electronic commerce operator. In a nutshell, if at all I want to talk about your stage carriage, if I want to talk about your contract carriage, your stage carriage is exempt if it is non-AC. Your contract carriage, when you talk about your contract carriage, you have to actually bifurcate, right? So radio taxi is always taxable, metered cabs and auto rickshaws are always exempt, and other contract carriage, your other contract carriage is exempt if it is non-AC plus not for tourism plus not for tourism. Now if you understand the taxability, this is always exempt if it is non-AC. If it is AC, it is taxable, right? This is also exempt. Metered cabs, auto rickshaws is also always exempt. Radio taxi always taxable. Is there any possibility of stage carriage being taxable? Yes, my friends, there is a possibility. When you talk about your air conditions stage carriage, it is taxable. Is there any possibility of other contract carriage being taxable? Yes, if it is for AC or for tourism purposes, then obviously it will be taxable. So these are the areas where it will be taxable. So we are not focused on taxable portion. So wherever it is taxable, forget about it. Now wherever it is exempt, in these three cases there is a possibility of exemption. They are telling that if at all it is applied through eco and it is covered under section 9(5), then this exemption won't hold good, it will be taxable, and tax would be paid by electronic commerce operator. So that is the nutshell of the amendment given in passenger transportation sector. Friends, one more small amendment has come in your government services, government sector, which is again quite simple. What they have done previously, when you're talking about services to government in relation to Article 243G and Article 243W, which means supplier is someone else, recipient is government, central government, state government, union territory or local authority, and the type of work is for doing a function which is panchayat related activity, Article 243G, or municipality related activity, Article 243W. So this is exempt whether it happens to be a pure service or whether it is composite supply of goods and services, where goods portion is not more than 25% of the composite supply, right? So if I were to put it this way, if at all you're talking about your government giving Article 243W or Article 243G services, that is exempt. Now what is the point that they are trying to tell us? Supplier is someone else, recipient is government. When I tell government, it is central government, state government, local authority and even union territory, right? And what is the type of services that we are talking about? The type of services that we are talking about is your pure services or composite supply, where goods portion is less than 25% of Article 243G panchayat related functions or Article 243W municipality related functions. So supplier is a third party. So this was exempt previously, this is still exempt. This was exempt previously, this is still exempt. Now you may add, then what is the amendment? The amendment portion is, previously this was exempt even when they were provided to governmental authority or government entity. even when these services are provided to governmental authority or governmental entity. Now, if I take the same scenario and if I tell that there is a supplier who is supplying the same kind of services to governmental authority or governmental entity. Governmental authority or governmental entity. Common point in both these scenarios is more than 90% control is that of your government, right? And they are either enacted by a law of parliament or state legislature, or more than 90% is by government. So that is the basic point that we are talking about. Governmental authority are basically there for doing panchayat related functions and municipality related functions, whereas government entity will do the work which is entrusted to them by the government, right? But they are not government per se, they are different from government, governmental authority or governmental entity. When the same services, pure services or composite supply, where the goods portion is less than 25% of the composite supply, what functions? Your article 243 G related work, that is panchayat related functions, or article 243 W related works, that is municipality related functions. Previously it was exempt, now this exemption is removed and it is made as taxable. So exemption is intact when you are talking about your such services to government, whether it is central government or state government or union territory or local authority, still it is exempt. But exemption which was there previously when these services are given to governmental authority or governmental entity is now removed, now it is taxable. So this is the amendment, friends, which has come in your exemption chapter, a small set of amendment that has come in your exemption chapter. Friends, now let us discuss about the small amendments that have come in your small dealers chapter, where we discuss about your exemption scheme, that is 40 lakhs, 20 lakhs and 10 lakhs, as well as we discuss about your composition scheme, 150 lakhs, 75 lakhs and 50 lakhs. Now what is the amendment that has come, friends, is they have added 4 HSN. Right, HSN 6815, which talks about fly ash bricks, fly ash aggregate, where 90% or more is fly ash content, and fly ash blocks. Next is your HSN 69010010, where you are talking about bricks of fossil meals or similar siliceous earths. The next is you are talking about 69041000, tariff item building bricks. And the next is 69051000, earthen or roofing tiles. In simple, you can call these items as building materials. They are used in construction sectors. Certain specified building materials covered under your HSN heading 6815, or your tariff item 69010010, or your tariff item 69041000, or your tariff item 69051000. So these are the specified building materials. For them, if you are manufacturing these specified materials, if you are a manufacturer of these specified materials, you cannot go for 40 lakhs exemption. You can go for your 20 lakhs or 10 lakhs exemption limit. If you are manufacturing these specified building materials, forget about your 40 lakhs limit. You can stick to your 20 lakhs limit and 10 lakhs limit, because when you talk about your 40 lakhs limit, it is by virtue of your a notification number 10/2019 CT, and this amendment has come in notification number 10/2019 CT. Now one question may arise, what if you're a trader of these specified building materials? If you're a trader of these specified materials, then you can think of 40 lakhs or 20 lakhs or 10 lakhs. Then you can think of any of them. The problem is only for a manufacturer. So if you're a manufacturer of these specified materials, what will happen? You cannot think of 40 lakhs. You have to go only with 20 lakhs and 10 lakhs. But if you're a trader, you can think of 40 lakhs or 20 lakhs or 10 lakhs. All the three doors are open. The same set of point is given under section 10(1) right along with 10(2). So when you're talking about normal composition scheme, which is normal composition scheme, we are referring to your 150 lakhs or 75 lakhs depending on which state or union territory you are in. Right, the same specified building materials. So I am again calling it as specified building materials. Specified building materials. The same set of specified building materials. Again the same point. The restriction is only for a manufacturer. If you are a manufacturer, you cannot go for normal composition scheme. The question is technically you can go for special composition scheme, but even this would be a question mark because special composition scheme is generally for services. You can have goods portion but a small goods portion. So technically yes, you can go for special composition scheme, but when you enter inside special composition scheme, basically friends, in your special composition scheme 50 lakhs, you are either talking about pure service sector or a service sector and goods sector where goods portion is less and service portion is more generally. So that again will not hold good. But if you are a trader, then you can think of normal composition scheme. Special composition scheme, yes, but with a small goods portion containing these items, but major portion will be that of services. Right. So this again is applicable only for a manufacturer. So if you just want to combine both, if at all you are a manufacturer of specified building material, first point, you cannot think of 40 lakhs. Only you can go for 20 lakhs, 10 lakhs. Forget about trader is normal option, 40 lakhs, 20 lakhs, 10 lakhs. Only manufacturer, you cannot think of 40 lakhs. And next, if you are a manufacturer of specified building materials, forget about normal composition scheme. If you are manufacturing these specified building materials, you cannot go for normal composition scheme, 150 lakhs, 75 lakhs. Though technically you can go for special composition scheme, it will not be of any use, much use, because basically in your special composition scheme, who are covered are where you are talking about either full service portion or service and goods portion, where majority would be service and lesser will be that goods portion. So that you need to understand. That is the amendment in your notification number 10/2019 for special exemption scheme 40 lakhs and your section 10(1) normal composition scheme. Friends, next we are talking about your amendment in your input tax credit chapter. So when you are talking about your input tax credit, there is a small amendment in this input tax credit. Basically the amendment is there in your section 16 of CGST Act, read along with rule 36(4) of your CGST rules. Basically they are one and the same. What is the amendment that has come out? Previously when you are talking about your credit, whatever credit is available in GSTR 2B, not 2A, GSTR 2B plus 5% you can take the credit. Now what they have said, whatever credit is available in your GSTR 2B, right, what are they telling? The details of your purchase invoice or debit note which are furnished by the supplier, finally they are filed, which are furnished by the supplier in their GSTR 1, and the details have been communicated to the recipient. So it has come to you. So it has been furnished by the supplier and it has come to you. When you talk about furnished of the supplier would have filed as GSTR 1 and it has come to you, not in your GSTR 2A, it should come in your GSTR 2B, which is static, right? GSTR 2B. So every month 13th late night or 14th morning you will get GSTR 2B, which is static. So you should get in your GSTR 2B, only that credit you can take. Previously the credit that you can take was credit as per GSTR 2B plus a small relaxation of 5% was given, or credit as per your books, whichever is lower. Now what are they telling? The credit as per your GSTR 2B or credit as per books, whichever is lower. So this 5% relaxation is no more there. Right, correspondingly, to make sure that no one is This amendment actually has come in section 16 subsection 2 clause AA to ensure that no one is challenging rule 36(4). Previously doubts were raised, how can there be rule 36(4) when there is no corresponding provision in the section? So what they did to make sure that no one challenges your rule 36(4), first they brought a provision called as section 16 subsection 2 clause AA to make sure that the validity of rule 36(4) is intact. Then in 36(4) what they said, again the same thing that we have discussed. They said that only that ITC of your purchase invoice or debit notes that your supplier has filed as per section 37(1). So supplier has filed GSTR1 and the details has come to you in GSTR2B. So supplier either has filed by GSTR1 or invoice furnishing facility. So when you are talking about supplier, he has filed his GSTR1. Supplier has filed his GSTR1, or few suppliers who are going for QRMP scheme, they will file their invoice furnishing facility and the same has been communicated to the recipient, that is to you, in your GSTR2B. Only that credit you can take. Beyond that you cannot take the credit. So the amendment point is the same, but what they have done is they have brought out section 16 subsection 2 clause AA to ensure that no one questions the validity of rule 36(4). And what they have said in rule 36(4), they have very clearly said that supplier should have filed his GSTR1 or invoice furnishing facility. They use the term furnishing because when you talk about GSTR1, technically it is furnishing of outward supplies. So the supplier should have furnished his outward supplies in his GSTR1 or invoice furnishing facility on or before the due date, and recipient should have got the information in GSTR2B. Only when he is getting the information in GSTR2B, to that extent he can take the credit. So previously there was a relaxation of 5%. Now that relaxation, that additional leverage of 5% has been removed, right? And now ITC is available only if supplier has filed this GSTR1 or IFF, the details of invoice or debit note, and the same is communicated to the recipient in GSTR2B. So that is this amendment all about. And below each amendment you will find the effective dates, which you may not remember, but just for information purposes. So at the end of each provision you will find the effective date of amendment. So here the effective date is 1st of January 2022. Now friends, a small amendment, very small amendment in your document chapter. E-invoicing previously was applicable when you are talking about the supplier's turnover, aggregate turnover in preceding financial year right from 17-18 crosses 50 crores. Now they have made this limit as 20 crores, which means if your turnover, aggregate turnover in financial year 17-18 or 18-19 or 20-21 or rather 17-18, 18-19 or 19-20 or 20-21 or 21-22, right? Any of these 5 years. So the words uses or if any of these 5 years your aggregate turnover is more than previously it was 50 crores, now it is more than 20 crores, any of these financial year. If you find that if the aggregate turnover is more than 20 crores, then in such a scenario e-invoicing will be applicable for financial year 21-22. So you have to check any of the preceding financial year right from 17-18. As now we are into financial year 21-22, the preceding financial year right from 17-18 will be 17-18, 18-19, 19-20, 21-22, 20-21 and 21-22. Rather, we are now into financial year 22-23. So if any of these 5 financial years, 17-18, 18-19, 19-20, 21-22, 20-21 and 21-22, if any of these financial years the aggregate turnover is more than 20 crores, any financial year, then you will have e-invoicing applicable for the current financial year, and we are currently into the financial year 22-23. So previously this limit was 50 crores. Now they have made the limit as 20 crores, and the plan is to take it further to 10 crores and then finally 5 crores. So CBAC chairman has said that they have the intention to reduce this limit further by 10 crores, and further in another year by maybe you will shortly see that the limit comes down to 5 crores. So e-invoicing amendment, 50 crores has become 20 crores. Now friends, they have also made an amendment in registration chapter with respect to your Aadhaar authentication. So this amendment is by virtue of introducing a new rule called as Rule 10B. They brought out a new rule in terms of your Rule 10B, and they have said that we want this Aadhaar authentication mandatory. Friends, if you remember, there is a difference between PAN and Aadhaar authentication. Without PAN, generally you can never get GST number. There are exceptions, but only limited exceptions, right? But without PAN, normal understanding is you can never ever get GST IN. But without Aadhaar authentication, without linking of Aadhaar, you can still get GST IN. Only thing that will happen is physical verification will become mandatory. So there is a difference. If you don't have PAN, you cannot get GST number. But if you are not linking your Aadhaar number, if you don't have Aadhaar number, if you are not linking your Aadhaar number, need not worry, still you can get your GST number. Only thing is physical verification will be made mandatory. So what government has in their mind is they want to make Aadhaar authentication somehow mandatory. Because many people, what they'll do, they'll forget, they'll ignore Aadhaar authentication and they are ready to go for physical verification of premises. So government indirectly tells that, okay, normally even if you don't authenticate your Aadhaar, you will be getting your GST number. Only thing is physical verification will be mandatory. But in few cases we want this Aadhaar authentication for sure. So what are they telling us? Any registered person other than a person who is notified under section 25 subsection 6D, which tells that they are exempted from Aadhaar authentication. So when you see your section 25 subsection 6D, they have given the list of persons for whom Aadhaar authentication is exempted. They need not get Aadhaar authentication at any point of time. So we are not talking about the exempted category. Certain people should have undergone Aadhaar authentication for sure. If at all you are talking about a proprietorship concern, proprietor should have gone for Aadhaar authentication. Partnership firm, any of the partners should have gone for Aadhaar authentication. HUF, Karta should have gone for Aadhaar authentication. If it is a company, managing director or any whole-time director should have got Aadhaar authentication. If it is association of persons or body of individuals or society, any of the members of managing committee should have got Aadhaar authentication. If it is a trust, any of the trustee in the board of trustees should have got Aadhaar authentication. And in addition to it, and it is not but and authorized signatory. If at all someone else is appointed as authorized signatory, a manager is appointed as authorized signatory, his Aadhaar authentication is also required. Supposing you are talking about a company where there is a managing director, there are multiple managing directors and a general manager is appointed as authorized signatory. So any of the managing director should get his Aadhaar authenticated, plus the general manager who is authorized signatory, necessarily his Aadhaar authentication should be there. So it is and. So first the focus is on the owners, and second the focus is on the authorized signatory. Under any circumstances, authorized signatory Aadhaar should be authenticated. Now depending on the constitution, the other person's Aadhaar authentication will be there. It is highly possible that the proprietor himself is authorized signatory, therefore proprietor's Aadhaar authentication is sufficient. It is highly possible that one of the partners himself is authorized signatory, so that partner can get his Aadhaar authenticated. So he will satisfy both the conditions. So that is also possible. Now what they have said is, normally even if you don't authenticate your Aadhaar, you will be getting a GST number. I said that the only thing that will be there is mandatory physical verification of the premises. But now government tells that in 3 cases, revocation of cancellation as per Rule 23, refund application as per Rule 89, refund under Rule 96 for IGST paid on export of goods outside India. That is your automatic refund case. Automatic refund case is only for payment of IGST on export of goods outside India. So it is only for goods, not for services. So you can remember it as R. One is, you can remember this a very hit movie. One is revocation of cancellation application, Rule 23. One is refund application, normal refund application, Rule 89. Special refund case, Rule 96, where you are talking about refund of IGST on export of goods out of India. So here it is only talking about export of goods outside India on payment of IGST. So first it is talking about only export of goods out of India. Second, it is talking about payment option. So this is the scenario of automatic refund. Why I am calling it as special refund? Because this refund is automatic. So your GST portal will connect to your customs portal, and then finally the refund would be automatic, the special refund. So in these three cases, government has said that if you want these three things, mandatory Aadhaar authentication. Aadhaar authentication, if it is not there, forget about these three, RRR. Now they carve out an exception. They give an exception. They tell that if a particular person has not been assigned Aadhaar itself, so it is highly possible that I am in a position to link my Aadhaar only if I have Aadhaar. What if I don't have Aadhaar itself? So if a person has not been assigned Aadhaar, then he can go for this RRR by giving Aadhaar enrollment ID slip, which means that he has applied for Aadhaar. So there will be an Aadhaar enrollment ID slip and your bank passbook with photograph, or voter identity card which is issued by Election Commission of India, or passport or driving license. So supposing I am talking about a partnership firm where the authorized signatory is not having there is a partner, one of the partner, his Aadhaar is there, it is authenticated, but the general manager is appointed as the authorized signatory, he is not having Aadhaar itself, and this particular partnership firm wants to go for this RRR. If they want to do anything else, they are allowed, but if they want RRR, if they want to go for this RRR, there is cancellation, they want to apply for revocation, there is a refund to be made, if they want, and there is a special refund to be made, if that all they want to go for RRR, Aadhaar authentication is mandatory. Now this authorized signatory is not having Aadhaar, so they tell that, understand, if at all a person is not having Aadhaar authentication is not possible. So what he can do? He can still go for RRR, but he has to give Aadhaar enrollment ID slip that he has applied for Aadhaar plus other proof. What is that other proof? Other proof can be a bank passbook with photograph, or voter ID, or passport, or driving license. These four categories, any one of them is sufficient. And they add additional point to ensure that this person is now able to go for RRR without Aadhaar authentication, because he is not having Aadhaar. Now they put a cross check and tell that the moment he gets an Aadhaar, within 30 days he has to get Aadhaar authentication. So when they give this exception, and tell that you can go for RRR even though Aadhaar authentication is not done because you don't have Aadhaar. First thing is, they give an exception only because you don't have an Aadhaar. Then they tell that first give the proof that you have applied for Aadhaar. So Aadhaar enrollment ID slip along with any of the four proofs. It might be your bank passbook with photograph, or voter ID, or passport, or your driving license. And once you get Aadhaar, what you have to do? Immediately within 30 days, go for Aadhaar authentication. Quite understanding. And these three RRRs, so you are talking about your Rule 23, Rule 89 and Rule 96. In all these three places, these three RRR, they have similarly the same point is put there also, telling that these three RRR is possible only subject to Rule 10B. So in corresponding amendment is there in these three RRR. So if at all you want to go for revocation, in revocation Rule 23 they have said that go with Rule 10B point, subject to Rule 20B. If at all you are talking about refund, in Rule 89 again they tell that it is subject to the provisions of Rule 10B. Even if you are talking about special refund, which is automatic refund when you go for payment of IGST on export of goods outside India. Again, there they tell that you should have gone for Aadhaar authentication as per Rule 10B. So that is the corresponding provision given these three places. So this was the amendment when you talk about registration chapter with respect to your Aadhaar authentication. A new rule is introduced, Rule 10B, and corresponding changes are done in the other three rules. Now friends, let us discuss about your amendment in your written filing chapter. A small set of amendment that has come in your written filing chapter. Interesting point in terms of your Rule 59 sub Rule 6. Rule 59 sub Rule 6. Now understand that this Rule 59 sub Rule 6 is basically talking about filing of your GSTR1 or furnishing of details of your outward supplies. Furnishing of details of your outward supplies in your GSTR1 or IFFS is restricted by way of GSTR3B. Now what amendment they have said is, if at all you are under QRMP scheme, if at all you are working under QRMP scheme, and if you have not filed your GSTR3B for the preceding tax period, whether it is month or quarter, you cannot file your GSTR1 or IFF. If at all you are working under MRMP scheme, and if you have not filed your GSTR3B for the preceding tax period, that is preceding month, then you cannot file your GSTR1. So what have they said is, they have linked it. Previously they had a complication, or this provision was complicated by telling that if at all you are going under your Rule 86B, then the formula is different, so and so. Previously they had the concept of 2 months. They have simplified this to the goal. What they have said is, either a person can be under QRMP scheme or he can be under MRMP scheme. If he is under QRMP scheme, if he has not filed his GSTR3B for the preceding tax period, only one pay tax period, right, he cannot file his GSTR1. And if at all you are talking about MRMP scheme, if he has not filed his GSTR3B for the preceding tax period, which is actually generally month, again no 2 months, preceding tax period, which is normally month, again he cannot file his GSTR1. Rather, if he is under QRMP scheme, he cannot file GSTR1 as well as he cannot file invoice furnishing facility. If he is MRMP scheme, there is no question of IFF, so he cannot file his GSTR1. See, beauty about GSTR1 is, I can file my May 2022 GSTR1 without filing April 2022 GSTR1. Highly possible. Normally this is not possible in other returns, but GSTR1 it is possible. Just go to the portal and try it. If I have not filed my April month's GSTR1, I can still file my May month's GSTR1. So it is not like your other returns where if I don't file, see what happens in 3B, if I don't file my previous month GST3B, I cannot file my next month's GST3B. But in one things are different. Even though I have not filed previous month's GSTR1, I can file the next month's GSTR1. But how GSTR1 is restricted? So there is no restriction on GSTR1 based on GSTR1. The restriction is on GSTR1 or IFF based on 3B. What are they telling? If you are not filing GSTR3B for the preceding tax period, you are not paying taxes. When you are not paying taxes, we won't allow you to file your GSTR1 or IFF now onwards. Why? I am not writing current period and all. Whatever is pending, we won't allow you. If you have not filed your GSTR1 or IFF for last few months, we won't allow you. The moment you are not filing your GSTR3B for the previous tax period, you are not paying taxes. It means that payment of taxes is not done. So they won't allow you to file your GSTR on IFF, so the opposite party, cannot claim ITC. If you are not in a position to file your GSTR1 or IFF, the opposite party will not get the credit in GSTR2B. So they won't get the ITC. So that is an indirect force. If you are not paying your taxes, they don't allow you to file your GSTR1 or GSTR IFF, rather GSTR1 or IFF, so that the opposite party does not get that in GSTR2. Be an opposite party is denied IDC. So indirectly the opposite party will force you that we have not got the credit in 2B, why are you not filing your GSTR1 or IFF? Please file your GSTR1 or IFF. And when the opposite party is pressurizing you and it is not releasing your payment, what you will do? You will file your GSTR3B. So it is an indirect route, right? If you are not making the payment, government tells that okay, no worries, we will not allow you to file your GSTR1 or IFF, so that your opposite party will not take the credit because it has not come in GSTR2B. They will now start pressurizing you by not releasing a payment. So you will be, if at all you want to file one GSTR1 or IFF, you will be forced to file your GSTR3B. So this amendment has simplified the earlier complications that were there by telling that whether if you are under QRMP scheme, MRMP scheme, and there was one more point, if at all you are under your rule 86B, 99% by credit but 1% by cash, all these complications have been removed. It has been simplified to the core, right? So that is the amendment in your written filing chapter.